Do you see gold coming back as in some way as part of the monetary system or replacing the monetary system in the future?
Yeah, I think fiat money is not, if you want to say in neoclassical terms, an equilibrium money. Why? Because money has two main functions, a medium of exchange and a store of value. Fiat money, it's a very bad medium of exchange, especially from an international point of view.
I think the dollar's gone down, what, 98% since the Fed.
And a store of value, it's also a very bad store of value, because in the last 50 years it has depreciated 95–98%. So the two functions of money are very bad accomplished with fiat money. So obviously people is always trying to find other assets who can be used to serve these functions that money should have. Which assets were? Well, in the last 20 years we have seen stocks being monetized, bonds being monetized, raw materials being monetized, housing being monetized, but obviously those assets develop bubbles. Their value, their market value goes above its fundamental value. So at the end you have a huge production of these assets and their price goes down. The case of gold is very different, not only because gold has monetary properties which the other assets have in a much less or harder way, but also because gold is relatively scarce. You cannot produce much gold in relation with the stock which already exists.
The supply is fixed,
the supply,
for all intents and purposes. Yeah.
Short run is fixed, but even if you increase, I mean, now we are, these last years, in the maximum historical production, annual gold production, but it's 1.5% of all the stock of gold already produced in history. So that doesn't make a huge change in gold supply, so it can keep its purchasing value. So you cannot talk about a gold bubble. That doesn't make sense. I don't mean that gold cannot plunge in prices. I mean that any price is good for gold, because as it's a monetary asset, it's not a productive asset, it doesn't produce anything, it's a monetary asset. Any price for a monetary asset which is stable can be good, can serve in order to accomplish their functions.
Yes, absolutely, and certainly if you look at the cost of things like oil and so on, over the long term, it has been more or less unchanged in gold, which is very different from looking at it in fiat currencies.
Yeah, in the long run, prices tend to converge with some relation with gold. So gold in the short run is very unstable, especially of course you have a fiat money system, because fiat money goes up and down in relation to gold. But in the long run, gold is very stable. So the store of value, the proper store of value, still today is gold, and gold prices today reflect that gold in part is being monetized by people. The monetary demand, the demand for liquid assets, for a store of value which is liquid, because obviously all can be a store of value, but not all store of value can be liquid and can be without risks, is being turned into gold from dollars, from euros, from stocks, from bonds, etc. And obviously it's still a very slow process, because if many people would have put all their or part of their monetary demand into gold, gold prices would have skyrocketed. But it's a significant process that has started, and that probably, if governments can't stabilize economies, and in the short run they are not able, and if they don't change their policies, they won't be able to do it, gold will continue to rise in prices.
So really, gold in that sense gives you more protection in the future than holding cash, if you like, fiat cash.
Yeah, totally.
Yeah. So really, gold in that sense should be a central part, perhaps, of one's asset mix if you're trying to protect yourself from the problems going forward from here.